Cynics in Asia might say that the intensity of opinions on China is inversely proportional to the proximity of the pundit. Everyone is a China expert these days, and as a result, the country always makes the headlines. China has grown so fast that funding the economy with debt has become commonplace. Indeed, Moody's yesterday downgraded its credit rating for the country's bonds. From afar, there are some reasons for concern. China's real estate market has had another boom period of soaring prices, just when another round of government stimulus may have peaked. Note that base metal prices have gone all floppy since January. This suggests that traders anticipate a downturn in the Chinese economy ahead. Domestic steel prices are off a sixth from December's peak. Key input, iron ore, has had it worse, down a quarter. Even so, that bearishness is a bit premature. True, iron ore inventories at Chinese ports are high. These have doubled over the past year alone. Previous surges of iron ore stocks have eventually led to a price sell-off. At the last inventory peak in 2014, though, iron ore was over $100 per ton. That not only squeezed steel mill margins, but allowed domestic miners of low-quality iron ore to grab market share from high-quality Australian producers Rio Tinto and BHP, plus Brazil's Vale. Iron ore today, though, is closer to $60 a ton, making that substitution much more difficult. Moreover, steel demand in China not only remains reasonably robust, but there are signs that government efforts to close inefficient mills there has had some bite. Analysts at Jefferies note that domestic reinforced bar prices have soared partly due to reduced capacity. Meanwhile, real estate prices have recently rebounded. Demand for steel in China, half the world market, has not died just yet. Iron ore may well settle into a range between $50 and $60 for the rest of the year. If so, shares of Rio Tinto, BHP, and Vale likely have some life left in them. All have dividend yields in excess of 4% and enough free cash flow to pay them. And BHP even has an activist stalker, Elliott Management, demanding more money for shareholders. From a distance, iron ore prices hint that Chinese steel demand will soon collapse. But given China's history of unpredictable government intervention, I think it's too soon to say that.